Welcome to our second quarter fiscal 2019 earnings call. Before we proceed, I would like to remind everyone that a replay of today's discussion will be available for the next few days, about an hour post the conclusion of the call. We shall be putting our transcript on our website in the coming days as well. To discuss this quarter's performance and outlook for the rest of the year, we have the company management comprising Dr. Kiran Mazumdar-Shaw, our Chairperson and Managing Director, and other colleagues from the senior management team. I would like to take this opportunity to remind everyone about the safe harbor. Today's discussion may be forward-looking in nature based on management's current beliefs and expectations. It must be viewed in conjunction with the risks that our business faces that would cause our future results, performance, or achievements to differ significantly from what is expressed or implied by such forward-looking statements. After the conclusion of this call, if you need any further information or have questions, please do get in touch with me. With that, I would like to turn the call over to Dr. Kiran Mazumdar. Over to you, ma'am.
Thanks, Saurabh. Thanks, Janice. Good morning, everyone. Let me start by wishing all of you and your families a very festive and happy Diwali season ahead. I now welcome you to Biocon's earnings for the second quarter of fiscal year 2018-19. And I'd like to start with the key highlights for the quarter. As you're aware, our partner Mylan commenced commercial sales of Fulphila, which is our biosimilar pegfilgrastim in the U.S. market. I should like to remind you that this is the first biosimilar pegfilgrastim to be approved and commercialized in the U.S. and the first product from our joint portfolio to be launched in the U.S. market. Our partner Equillium filed an investigative new drug or an IND application and received a go-ahead from the US FDA to progress itolizumab, our novel anti-CD6 molecule, into clinical development in the US in certain orphan indications. In September, the European Medicines Agency's Committee for Medicinal Products for Human Use, or CHMP, issued a positive opinion recommending approval of Fulphila, our partnered pegfilgrastim, a biosimilar pegfilgrastim, and the CHMP positive opinion will now be considered by the European Commission and with a likely approval expected by November 2018. In October, the same committee also issued a positive opinion recommending approval of Ogivri, our partnered biosimilar trastuzumab, and the decision of this approval by the European Commission is expected by December 2018. Our partner Mylan initiated the commercial launch of biosimilar adalimumab across major markets in Europe post 2016-2018, and Biocon will receive economic benefit for this product in line with our global collaboration with Mylan. Now moving on, I would like to present some key financials for this quarter. Our total consolidated revenue for the quarter was at 1,375 crores, up 35% over last year. Revenue from operations were 1,321, which grew 36% over last year. This includes licensing income of 5 crores for this quarter compared to 8 crores in Q2 of last year. In terms of segmental performance, small molecules revenue was at 432 crores for Q2, up 23% over last year. The biologics segment was the strongest performer, reporting 136% growth to 367 crores. Branded formulations were down 7% at 164 crores, and research services, or our Syngene business, grew 25% to 419 crores this quarter. We booked a forex gain of 24 crores this quarter as compared to 18 crores in Q2 of last year. and this gain is of course is reflected in the other income line of the profit and loss statement. We incurred gross R&D spend of 120 crores this quarter, corresponding to 13% of revenue, excluding Syngene. Of this amount, 77 crores is reported in the P&L. We capitalized an amount of 43 crores related to our biosimilars and insulin analog development expenses. The gross spends are higher than last year, primarily on account of increased spend in biosimilars and insulin analogs in terms of their development programs. Based on strong operational performance, EBITDA grew 69% to 394 crores. EBITDA margins for this quarter was 29% as compared to 23% in the corresponding quarter last year. Core margins, that is EBITDA margins net of licensing, forex and R&D, improved from 26% in Q2 last year to 33% this quarter. Net profit for the quarter increased from 69 crores in Q2 of last year to 355 crores this quarter. This includes one-time gain arising out of an exceptional item reported in the quarter as the company fair valued its investment in US-based Equilium. Adjusting for the exceptional gain and associated tax, net profit for the quarter was 184 crores, representing a net profit margin of 13%. I'd now like to delve a little deeper into our segments. Small molecules, as I mentioned earlier, grew 23% over last year. This was on account of a better product mix accompanied by volume growth in statins, immunosuppressants, and other key APIs. Our rosuvastatin, calcium, and simvastatin tablets continued to gain market share in the US, which added to the growth. The biologics segment revenue more than doubled as compared to last year, growing 136% year-on-year. Sales and profit share from commercial launch of biosimilar pegfilgrastim in the US led to the strong performance during the quarter. Trastuzumab sales continue to do well in the emerging markets, with launches in newer geographies and increased prescription share in markets where it has already been commercialized. Recently, our local partner launched the product in Turkey, where our trastuzumab was the first biosimilar trastuzumab to be approved in Turkey. In Algeria, our product continues to enjoy a wide acceptance amongst patients and prescribers, whilst there has been a strong uptake of trastuzumab in Brazil. The insulins business recorded a strong growth led by sales in several emerging markets. Biocon holds dominant market share in human insulin in Mexico, Malaysia, Thailand, and many markets in Latin America, directly or through its local partners. When it comes to branded formulations, the revenues for this segment in India and UAE decreased 7% compared to last year. Performance in India was impacted on a higher base of Q2, which benefited from restocking by trade post GST implementation last year. Decrease in sales which has been seen in major divisions, was partly offset by growth in comprehensive care and nephrology. In UAE, the in-licensed metabolics product portfolio and Glaricon, our brand of insulin glargine, continued to gain market share, while in the branded formulations generics market, we face challenges with repricing of products by the Ministry of Health. Research services, which is our Syngene business, reported a growth of 25% over last year, driven by small molecule discovery services and increased traction in the dedicated R&D centers. During the quarter, Syngene has commissioned a new dedicated facility for Bristol Myers Squibb and renewed its collaboration with Baxter, which involved a widened scope of engagement and setting up of additional infrastructure. Let me now turn to product development updates. As a part of our novels molecule portfolio, phase 2, phase 3 study of our oral insulin candidate, insulin Tregopil, is progressing well. Equillium, our partner for itolizumab for the US and Canada, as I mentioned earlier, received approval for an IND for the molecule from US FDA. It plans to conduct clinical trials for orphan indications, including treatment of acute and chronic graft versus host disease, or GVHD, and asthma, and expects to initiate clinical trials in the first half of 2019. To fund the clinical trials, Equillium raised $65 million in its maiden public offering and listed on NASDAQ on October 12th. Basis the IPO pricing, Biocon's 13.5% stake in Equillium is now valued at $32 million. Now, before I conclude, I would like to summarize our performance and our expectations for the rest of the financial year. We have finished the first half of this fiscal delivering a strong performance across small molecules, biologics, and research services segments. Increase in sales growth helped by a better product mix in small molecules and growth in the biologics segment led by pegfilgrastim has resulted in better margins and consequently doubling of earnings over the first half of last year. We look forward to a strong performance across business segments in the second half of this fiscal. We expect momentum in the biologics segment to continue with new market launches expected later in the year and increased penetrations in markets where our products have already been commercialized. With that, I'd like to open it up for question and answers. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We will take the first question from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity and congratulations on good set of numbers. Ma'am, first question is trying to understand this biologic sales that you've done. Is there a thought of revising your guidance of $200 million given the momentum has really picked up? So just wanted your thoughts there, as you just mentioned that, you see incremental penetration across products and also new launches in newer markets. That would really help.
So, Prakash, there is no revision to the guidance. We are, as you know, the numbers for the first half have been strong, and that gives us an added comfort that we will meet our $200 million guidance. And hopefully we can beat it, but we cannot give a number, the revised number for the year.
Okay. And the guidance was largely for emerging markets, did not include regulated markets. So it would be over and above, right?
No. Well, the guidance was primarily from emerging markets, but it did include launch quantity for developed markets. So we had expected launches in developed markets in this fiscal.
Okay, understood. Fair enough. And just trying to understand this better, would it be fair to say that, the launch quantities you mentioned about PEG, it's going to increase from here and hopefully there's no channel filling as such because it's a huge molecule in the US. Would that understanding be correct?
I think this is Paul. I think it's early days in the launch, and so we'll have to see how this evolves. And I think really Mylan will be best placed to comment on the trajectories going forward.
Okay, thanks. And last question is on margins. Despite higher R&D, margins have really come on well. So this is the new base is what we should consider going forward given the business momentum is picking up? Well,
I mean, I will not really look at one quarter and say that's the new base. I think would continue to have higher margins as the sales grow in our biologic segment, because biologic segment is profitable compared to last year. Compared to our other segments. And if you look at the segment-wise results this quarter, even the small molecule segment delivered a strong earnings of the profit line. And biologics, which was actually loss-making last year because of capitalization of Malaysia, has turned profitable. So combination of everything will hopefully continue to improve our margins on a go-forward basis.
Great. Thanks. I have more question. I'll join back the queue.
Thank you. Next question is from the line of Dhiresh Pathak from Goldman Sachs. Please go ahead.
Yeah, thank you. I wanted your thoughts on, the biosimilar glargine with Merck and Samsung withdrawing from that. Just wanted to understand if you can, give us some thoughts on, why they would have done it.
Well, we won't be able to speculate on why they would do it. Our information is what we too have read, what's in the public domain. However, from our perspective, of course, we have strongly invested in our entire insulins portfolio, comprising not just glargine, but the basket of insulin analogs as well as recombinant human insulin. And we have always guided saying that we wish to be a dominant player in this space. We have already, I think, in Kiran's opening remarks, mentioned how we have already established dominant position in many of the key emerging markets. And we would, as and when we are able to get approvals and penetrate markets globally, try to continue to, believe in this space and invest in this space, going forward. We are clearly, of course, awaiting the opening of the U.S. market, which we have said can happen for glargine sometime in early 2020. And that would further, bolster our presence.
Okay. And on the numbers, just one question. So, X of Syngene, the other expenses in, Biocon's business, X of Syngene, the overheads, which is the employee cost and other expenses. So they have increased quarter over quarter. Adjusted for R&D also, they are up like some 40 crores. So is there some investments in employee, some hiring or something of that sort, or is there some one-off, if you can talk about that? Is there a currency one-off in your other expense? X of Syngene, I know they called out. So is there anything if you can explain that will give more color on this?
The currency impact is in other income. In terms of staff cost, we continue to add more people every year to aid the growth of our businesses, various businesses. And other expenses have gone up in line with the revenue increase. So some of the selling expenses, which are directly linked to the sales, they have gone up. So there's been no abnormal increase in the quarter.
Okay. So as you book, as you will have these large, dollar-denominated earnings stream that will come from developed markets biosimilars, are you going to hedge that or you will not hedge those?
Well, we do hedge our net exports through range forwards, and so far, most of our hedges are within the range, and so we continue to benefit from the rupee depreciation.
Okay. All right. Thank you. I'll get in the queue.
Thank you. Next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, congratulations for the great set of numbers. Also, a positive development on the itolizumab front. So just wanted to have some clarity on this itolizumab front. This is the out-licensed molecule for equilibrium, right?
That is correct.
Okay. And now, see, what incremental benefit Biocon can have out of this development if it progresses well? So whether the manufacturing right or marketing or profit share right, or what that can come for Biocon out of that?
Okay, so let me just give some color to this transaction. This is, as you said, a licensing deal for itolizumab for the US and Canadian market for a set of indications. The licensing deal involves, as Kiran mentioned in her opening remarks, an equity stake in Equilium, which post the IPO stands at about 13.5%. Yes. Additionally, Biocon retains the manufacturing and supply rights for the product to Equilium, both clinical as well as commercial. On top of that, Biocon is entitled to royalties and sales milestones upon commercialization.
Excuse me, sir, this is the operator, Mr. Surya Patra, requesting you to please use the handset mode as there's a lot of disturbance from your line.
Okay.
Thank you.
Fine. Okay. Is there any funding requirement there for the clinical development from the Biocon side?
No, as mentioned in the opening remarks, the funding of this has been raised through an IPO by Equilium, and as disclosed, Equilium raised about $65 million in the IPO, which is adequate for the funding requirements for this molecule for the indications outlined.
Okay, fine. Great. Secondly, on the pegfilgrastim, sir, is there any clarity that, okay, so whatever swing on the biologic revenue that we are sequentially seeing, what portion of that would be coming from the peg and what from the progress in the emerging market? And also if you can indicate whether any profit share of the peg is there in this number, biologic sales number?
Yes, this quarter, because of the launch of pegfilgrastim in the U.S. market, the revenue includes both the supply of product as well as our share of profit from Mylan sales. And as we've already mentioned, good chunk of the increase, the delta over previous quarter, has come due to this, pegfilgrastim. However, our base business is strong and continues to grow in other geographies and with other biosimilars.
And so that means there is no lag between the profit share and the revenue share in the PEG business. That is what the fair understanding, sir, why? Because the launch itself happened in July, right?
So we book the profit share when Mylan sells the drug to their customers. So the inventory that they hold, we do not book the profit on that. So there will be some lag. Because if you recall our first quarter, we had supplied the launch quantities actually in quarter one, which would have been liquidated by Mylan in quarter two. And so they will still have the inventory with them, for which the profits will come in next quarter.
Okay. Okay, so that means this quarter also there was supply.
Yeah, I mean, it will be continued supplies. I mean, every month we'll supply. Okay, fine.
Third, on the adalimumab front, is there any one-off benefit that is there because of the adalimumab launch in Europe?
No, there is no one-off benefit. No. There are no licensing payments from Mylan, and this is a in-licensed product from Fuji Kirin in Japan. And the launch has been done with that product.
Okay. So here, sir, can you provide some clarity about what kind of milestone that Biocon can get?
There is no milestone. We will get a profit share.
Okay. Okay. Whenever that happens. And just one more last question, sir. On the capex front, since you are seeing the successful launch of pegfilgrastim in US, and there is a likelihood of the launch of the PEG and Trastuzumab in US, so in Europe, so and there is ramp up also visible in the emerging market. So, is there any thought process, clear thought process about the map plant what we have been talking about since some time, and when that should be ready?
The investments in the manufacturing facility are already on. I think we mentioned it for the last few quarters that we had triggered an expansion of our monoclonal antibody facility with an outlay of about 200 million spread over three fiscals. And that's very much on track.
Okay. And that would be available in 2 years' time. Is that fair?
is a fair assumption for the approvals will be market by market, but from a commissioning standpoint, yes.
Okay. Yeah. Thank you, sir. Wish you all the best.
Thank you. Next question is from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Hi, good morning. Thank you for taking my question. My first one is on pegfilgrastim in the U.S. again. What is the current market share that we are tracking as of the quarter close, and how is it tracking in line with your expectations? And lastly on this one is how has the innovator kind of responded to the entry of the biosimilar?
So in terms of what's available in the public domain is what I can allude to. If any detailed specific questions on launch strategies and launch uptake, I would defer to Mylan. What we know from publicly available sources is that there has been a 3% market share of the syringe market based on the initial data.
Okay, and looking at your current that market share, is it tracking in line, or do you have to do certain other things like take pricing down? Any of that needs to be done?
I would defer all these questions to Mylan, but what I can say is right now, as far as Biocon is concerned, everything is going as per plan.
Got it. Thank you for that. My second question is on the small molecule business. We have seen actually a sequential uptick. Margins have also improved. So can you just give us some, outlook on how the pricing environment is, specifically in the U.S. and in the rest of the world, and what's led to this kind of uptick sequentially? Thank you.
Well, one reason for the uptick has been the better product mix that we've had, and of course increased demand. We've seen both the uptick in volumes as well as an uptick in terms of steadiness in terms of the pricing. A bit of the revenue gain is of course also come from the dollar benefit that currency benefit, that we've had. So clearly, I think in the past we mentioned that at least in terms of some of our base products, like the statins, we believe we've seen the bottom of that in time. There's been no further significant erosion in terms of prices. We guided for like a low single-digit erosion of prices. Some of that erosion has been offset by the currency. Secondly, of course, you know that our business has, in terms of generic formulation through our ANDA business, has also started to make meaningful contributions to the small molecules segment through rosuvastatin and simvastatin, and we would have a couple of other molecules in that basket, going forward. So that also has been a decent contributor to the revenue.
Okay. My third question is on adalimumab. Do you know what the price discount that you had to launch it in Europe?
No, that is not something that we could talk about.
Okay. And my last question is on the tax rate. In 1Q, I think we had guided that tax rates will go up. If I strip out that exceptional gain, it seemed to have come down at 21% at least. That's what we could calculate. Is there something changing there, or we stick to our earlier guidance?
Yeah, I think for Biocon, excluding Syngene, we should be looking at 24-25% for the year.
Got it. Okay. Thank you so much, and all the best.
Thank you. We take the next question from the line of Abhishek Nama from Prescient India Health. Please go ahead.
Hello, hi, good morning. So first I want to congratulate you on positive CHMP opinion from EMA. So I just want to understand the launch of Ogivri in European market. So what will be your strategy to launch, because market is already occupied by various key companies. So how will you launch your product? Like, what will be your strategy to capture the market share?
All the commercial decisions in the developed markets for our partnered portfolio with Mylan would be basically determined by Mylan. So all these questions regarding commercial strategies, launch timings, pricing, competitive responses are best addressed by Mylan.
Okay. And one more question, like about emerging markets. So apart from Turkey, Algeria, and Brazil, what are your next countries which you are targeting to launch your business?
We continue to file in emerging markets, and as and when we get approvals, we will launch. Basically, the launch cycle will be determined by the cycle of approvals, and it's hard to predict which country would approve first because we do multiple filings simultaneously across many markets.
Okay, thank you. That's all.
Thank you. Next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Yeah, thank you so much. Just on Glargine for the U.S. market, what are the next few steps for you to do the site switch to Malaysia?
I think our bridging trial is progressing well, and that was basically the data that the U.S. FDA requested for. And so once we have the data, we expect to respond to the CRL. As you know, we've always guided that there would be no impact on the launch timing, which is largely determined by the 30-month stay, and that position continues to hold.
Okay, great. And after, once you submit once you finish the bridging study, then what are next couple of steps? Would you require FDA to come down to do reinspection?
No. See, because this is about the dossier. This is not about GMP. The data is largely a clinical bridge, so it's more a dossier evaluation.
Okay, got it. And the second question is, from a launch timing perspective, the underlying Para 4 court case, do you not think that can potentially delay you?
No, what I'm saying is that case is what is the 30-month stay. No? That's the 30-month stay I'm referring to, which ends sometime in March or April 2020.
Yeah, that 30-month stay is for the approval of 505(b)(2) file. But
right.
It's not a timeline for the judge to give the judgment.
Sure.
That case would still be undergoing. So
that is Mylan's call in terms of launch strategies post the 30-month stay, subject to us getting the approval.
Okay. And so the next question is on the PEGFIL in the U.S. I know you can't talk too much on the commercial side, but it's a general question which is coming from Remicade in Flectra launch, where, as you know, the innovator signed exclusionary contracts through bundling of its portfolio. It's a very general trend, but what it resulted in was complete blocking out of the biosimilar, more or less. Now, the question here is, for your PEGFIL, is this something that you have so far seen in the market or not? I'm not looking for any data or any such thing.
Hi, Samir. This is Paul. Thanks for your question. I think we have seen that dynamic, and a lot of press about that dynamic with Inflectra. I think this is a different. The product is present in a different part of the market, so I think we can't bridge over directly necessarily. Obviously, I think specifics on this will have to come from Mylan, but I think I would just suffice it to say that, we are in a different part of the market. And I think the other thing to remember is that, Pfizer is still recognizing significant, meaningful sales that are growing 20% or something like that quarter on quarter in the U.S., even with the challenges that are faced.
Okay. Also, if I've understood you correctly, you are in a different part of the market. So the part of the market that you are in is not, can't be blocked so much through these exclusionary contracts.
So each company will have, there are lots of ins and outs to how each company will apply their contracting and their pricing strategy. And so, I guess my limited comment would be that it's not, even within the same molecule, you won't be able to necessarily apply the same thinking across all of them. But I think certainly with a different molecule in a differently structured market, I wouldn't make that assumption. But I think it's better to be addressed to Mylan.
Okay, very clear. Thank you so much for your comment, Paul. And my favorite question, Arun, to you for Copaxone. How is the refiling in progress? Are you on track for fiscal 19 refiling?
See, as I told you, I always tell you that having once told you, given you a guidance, and then, having not kept that, I refrain from giving you a guidance. But believe me, we are actively working on that, and we would file, as soon as we can.
Okay. And the last one from my side is on Aspart. How's the progress you've commenced, the regulatory progress? You've commenced the phase 3 clinical trials for that?
So, Samir, this is Shreyas here. As we've said before, we are expecting to start the phase 3 clinical trial in the second half of this year, and we're trending well to those dates that we've guided before.
And you would take 24 months to complete this? Would that be the understanding?
So the trial timeline should be around that time, and then it would follow with a phase of finalizing the database and then putting the documentation together for the CSR.
Got it. Thank you so much.
Thank you. Next question is from the line of Vipul Shah from Sumangal Investment. Please go ahead.
Hi, sir. Congratulations for a good set of numbers. Can you comment on the capacity utilization of Malaysia, sir? Hello?
We do not comment on our capacity utilization for our plants, but Malaysia has done fairly well, and I had mentioned earlier that this quarter we have seen a good profitability for our biosimilars division, and Malaysia, we had guided, would be break-even this year, and we are on track for that. And that it will get break-even only when it has a decent capacity utilization, and we continue to gain our sales of insulin and glargine from Malaysia as more and more approvals from the emerging markets come in.
So, should we interpret that we should break even by the year end? I mean, financial year end?
Can you repeat the question?
Means we have break even in this quarter, or are we expecting it by this year end? I mean, March 19.
So this quarter has been a very minimal impact of Malaysia, but it will be break even for the year is what we have said, for the full fiscal.
Okay, sir. Thank you, and all the best.
Thank you.
Thank you. Next question is from the line of Ranjit Kapadia from Centrum Broking. Please go ahead.
Arti, congratulations for good set of numbers. I have two questions. My first question is how many scientists are there in BMS project and Baxter project? And my second question is related to number of MRs in the branded formulation segment. And when this branded formulation is likely to reach critical mass, because currently it is just 12% after so many years.
So, in terms of Syngene numbers, I don't have the exact numbers, but I think the BMS numbers are a little over 500 as in their dedicated center, and Baxter, I'm not exactly certain, but I think it is definitely over 100.
Okay.
And as far as our branded formulations business is concerned, maybe I'll turn it over to Suresh.
Thank you.
So, hi. Thanks for your question. On the branded formulation business in India, we have around 850 field force. On your second question on how will we ramp up, I think the plan currently it'll be two ways. One is driving therapeutic leadership in oncology and metabolics. We have come some distance in the last 2 years, and through our new launches from our own internal stable in the coming years, and through in-licensing activity that is going on, that will form the basis of driving a critical mass for BFI in the coming years. Hope that answers your question.
Okay, thank you very much, and wish you all the very best.
Thank you. Next question is from the line of Charulata from Dalal & Broacha. Please go ahead.
Yeah, my question pertains to Pexil and Trust2. Which are the other markets where you have received approvals but not yet launched?
The big market from a developed market perspective is clearly the US, where we've received approval and not yet launched. In emerging markets, for reasons of competitive dynamics, I'm not at liberty to disclose publicly because that would basically alert competition in terms of where we are ready to launch.
Okay. And what would be your R&D guidance for 19 and 20?
I think we would continue to maintain our previously stated guidance of around 13 to 15% gross R&D spends ex-Syngene.
Okay. And CapEx?
CapEx, again, we've guided that it will be roughly 750 crores per year. So we continue to have those kind of estimates for the next 1 or 2 years.
Okay. Fine. Congrats. Thanks.
Thank you. Next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity again. Just clarification on what Sir said is on the market share. Was it 3% of the total market, or is it excluding the on-pro kit, that is the syringe market?
I think it's excluding that.
Okay, 3%.
Yeah. That was, I think, IMS data. September IMS data, I think.
But we don't have really...
But I don't have the direct information on that. This is just third-party information. So you can corroborate this.
Okay, understood. Thanks for this. And secondly, one more clarification on this equilibrium revaluation that we've gained. So this is largely on account of, losing control and we have to revalue. So does this happen annually, quarterly? Is it a function of, what is the base of the current valuation?
Well, it is a one-time valuation, and it's because of loss of significant influence that we had. It was changed to an investment as an investment, and the fair valuation was done as of September, when we had actually moved from significant influence to investment. This is a valuation that was conducted by Equilibrium. It was not the IPO valuation.
Okay. I understand IPO valuation would be much higher?
No, it's slightly higher. I think we indicated it's 32 million is the current value of our holding, which is also roughly 200 crores, and the fair valuation gain was 189 crores. So that's the differential between the two.
And would this be annually, accounted? It
will be quarterly fair valued. This investment will be quarterly fair valued, and the differential will be carried through balance sheet or OCI, not through P&L.
Okay, so this is clearly one time.
Yeah. One time non-cash exceptional.
Understood. Great. And lastly, on the capitalized piece, so which are the current assets which are getting capitalized, and how do we see the R&D for next year?
I think Arun just answered on the R&D that we continue to maintain at around 13 to 15% of ex-Syngene revenues. As far as the capitalization is concerned, we continue to capitalize bevacizumab, which is the biggest spend right now, and a very small portion of trastuzumab and glargine in the additional trials that we are doing in the US.
Okay. Are we breaking it down, the capitalized value for the asset?
No.
Okay, understand. Thank you.
Thank you. Next question is from the line of Prashant Nair from Citigroup. Please go ahead.
Yeah, good morning. Just one question on, can you give any sense on the timeline for launch of Semglee in Europe?
I think Mylan had in their previous calls guided for launch by the end of 2018, and I think they're on track for that.
All right, yeah, thank you.
Thank you. Next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, just one more clarification. So, with the approvals for the biosimilars like Qtr2 and the glargine coming in Europe, do you really think that or is it fair to believe that the revenue traction in the emerging market will really surprise positively and much better, and that would be better than the European contribution in the immediate visible future?
I'm not quite sure whether there is a link between the two markets, because clearly each market tracks to its own dynamics. In emerging markets, the volatility in some emerging markets comes from markets which are tender-driven, where sometimes you may win some or lose some. But as far as retail markets and other markets are concerned, you will see a steady growth.
Okay, I was coming from the point that since Herceptin or trastuzumab itself, if you consider, it is almost equally distributed across US, Europe, and ROW. So, and the way the market has expanded in India post our launch of the product at a discounted price point, possibly the similar scenario is possible in the emerging market as well. So, from that standpoint,
No, I agree with you that there will be an expansion of the market. I'm not talking about trastuzumab, but if you see the European market for other biosimilars which companies have launched, there has been a significant increase in access because of the lower pricing. Now, this distribution that you're talking about, one-third in trastuzumab, was based on innovator pricing and innovator sales. Clearly, that dynamic may look different on a biosimilar base because the pricing in different markets and the value in different markets may be different.
Okay. And second, on the Sandoz Association front, any progress so far that it is worth discussing?
Well, they are earlier stage assets, so they are continuing to make progress. As we've said before, they are yet to enter the clinic, so they're still at an early stage. We continue to make progress on the R&D front.
And from our side, we are also contributing equally in the similar manner?
That's correct.
Okay.
It's a 50-50 sharing.
Yes. Okay. Thank you, sir.
Thank you. Next question is from the line of Damayanti Karai from HSBC. Please go ahead.
Hi. My question will be regarding the broad market for biosimilars in the U.S. So, we have now launched Fulphila. We haven't heard anything like major change coming on the market development as such regarding acceptance by the channel and all. So what would be your comment? Are you seeing any changes which will be ultimately favorable for biosimilar acceptance in the U.S. in long run, or situation is more or less similar, we are not seeing much changes there?
Yeah, this is Paul. Thanks for your question. I think as you've mentioned, there are various different dynamics going on in the U.S. and it's still evolving. I think earlier in the call there was the contracting kinds of challenges that some players have seen in those therapeutic areas. At the same time, there's been a lot of commentary from FDA about trying to reduce the role of middlemen in the supply chain and rebating, changing things like that, and some further commentary yesterday or today, I guess, from the Trump administration on working on drug pricing. I think overall there's a lot of factors in play, but clearly the biosimilars are part of the market that is trying to reduce the burden on the healthcare system, on the government and payer cost burden overall. And I think these changes in general should be supportive of biosimilars overall. I think biosimilars are clearly part of the solution in the long run.
Yes, so this we have been hearing for some time now, but the thing is, as such, we haven't seen any tangible announcements coming in the market or tangible changes in the market. So any expectation around that line when we can see something positive coming from the government which they can implement to increase adoption of biosimilars? I know it's difficult to predict, but any thought over there would be helpful.
I think, as Paul mentioned, I think there is an intention of the Trump administration to support biosimilars, and there have been statements made to that effect without a clearly articulated policy. But having said that, you also heard him saying that even in the biosimilars that have been launched, there is a now indication that there is improvement in acceptance. You just heard that Pfizer themselves have seen a 20% steady growth of uptake. So it tells you that things are going in the right direction. And I think these are early days in terms of biosimilars in the U.S. market, and you will likely to see a much greater acceptance going forward.
Okay, ma'am. Thank you.
Thank you. Next question is from the line of Nitin Agarwal from IDFC Securities. Please go ahead.
Thanks for taking my question. Arun, we've done a phenomenal job with our first wave of biosimilars. So how should we look at, life beyond that in terms of which would be our sort of second wave of new launches and what should be the typical timelines for commercialization for some of our second wave of biosimilars?
So clearly, if you look at it, Biocon has been consistent in its belief in the biosimilar story, and that consistency is shown by, number one, the large portfolio of products that we have partnered with Mylan, where we've got about 10 odd products partnered with Mylan, where we even expanded the partnership, adding 2 more earlier this year. We also have a partnership with Sandoz, as you know. We've not disclosed the number of products, but clearly, there are products there which add to the pipeline. And beyond this, we would be looking at developing products on our own as well. So from a long-term perspective, we would have a very healthy portfolio of biosimilars, which will be developed, in a prudent way and based on what we believe are the likely market formation dates from a LOE perspective. So based on, timing them roughly along with those times, we see a very healthy pipeline of products, coming into the market. If you look at the Mylan portfolio itself, in addition to the 3 products where we've already received approvals in some major market or the other, either Europe or US or Canada, Australia or Japan, clearly we've made significant progress in the clinic with bevacizumab, so that's the next thing to look forward to. Glargine approval in the US is coming on. Aspart will be entering phase 3 trials, shortly. So clearly we are making advancements there, and although the Sandoz programs are at an early stage, I think when we announced the Sandoz partnership, we clearly said that from a timing perspective, they would address opportunities which open up towards the middle of the next decade, whereas Mylan sort of addresses opportunities in the earlier part of next decade. So clearly there's a wave, and our sort of judicious approach to expanding capacity reflects that belief, where as we get approvals, as we expand portfolio, and as we gain market share, we will be a dominant player in biosimilars.
In fact, I would also add by saying that as a company, I think we have one of the largest portfolios of biosimilars under development. And I think that should basically tell you about how committed we are to see be a dominant player in biosimilars. So this is clearly a very, very differentiated strategy. No doubt it is a high-risk, capital-intensive strategy, but it is actually beginning to play out for us positively.
And just to add to what Kiran said, the other differentiating factor, if you look at it's not just the size of our portfolio, but the differentiated portfolio that we have in terms of different technology platforms. We have a large portfolio of antibodies, which of course many other companies also are pursuing, but we also have a large portfolio of insulins and insulin analogs. So looking at both baskets together and other recombinant proteins, we would have breadth as well as depth in our...
and a fully integrated model at that. Because another very big challenge in this whole biosimilars area is having the kind of global scale capacity, manufacturing capacity to address these kind of market opportunities which not everyone has.
Fair enough, thanks. And if I were just to add on to that, in your assessment, how important is it in biosimilars to be in the first wave of launches?
In fact, I would also add by saying that as a company, I think we have one of the largest portfolios of biosimilars under development. And I think that should basically tell you about how committed we are to see be a dominant player in biosimilars. So this is clearly a very, very differentiated strategy. No doubt it is a high-risk, capital-intensive strategy, but it is actually beginning to play out for us positively.
Well, it's obviously nice to be in the first wave of launches, but it's not so precipitous as in small molecules, where there is significant value erosion between the 180-day exclusivity and post that. We have not seen that kind of a difference yet, but it's early days. We don't know how the dynamics will change if there are, for example, 10, 15 players per molecule.
So the point I was making is, in your assessment, when you sort of project, you are doing your internal assessment on the future opportunities. I mean, at what stage, or does just theoretically, hypothetically, I mean, what stage, does the product doesn't start to become that attractive for you? I mean, since when you believe that you're going to the third or the fourth or fifth player, or up to number 5, it doesn't really bother you that you're, if you're say probably fifth player in the line to get an approval, it doesn't bother you, or after number 3, it starts to become a not such exciting proposition. Is there some framework that you guys use?
So right now, I think you should understand that these are very early days of biosimilars. I think there are not too many players. So I think these are questions we will address at a later stage. Right now, you can see that there is also a shakeout even at this early stage. You also heard, certain companies say that they would like to sort of drop out of the biosimilar strategy. So it is not an easy area to be in. So these are early days yet. It's an evolving space. Obviously, we will, look at our strategy as and when dynamics change. But at this point in time, we do not see this becoming an overcrowded space.
Thanks. That's helpful. Thank you, and best of luck.
Thank you. Next question is from the line of Harith Ahmed from Spark Capital. Please go ahead.
Hi. Good morning, everyone. Just one question from the balance sheet. This is on the other current liabilities, which I believe is the deferred revenues. And this number has increased by close to 300 crores versus March. And just wanted to understand which products are these related to, and over what time period this revenue will get booked. And lastly, if whether this will be booked as licensing income or as part of product sales.
So you're right, it's relating to the deferred revenue adjustment that we had done once we had to adopt the new accounting standard at the beginning of the year. The amount, I think, in the balance sheet is roughly 200 crores. And this will be recognized over a period of 5 to 7 years. It's booked in licensing income. I think for the quarter, it was there in Kiran's opening remark that the number for the quarter was roughly 5 crores, and it was a similar number in the first quarter as well. So you will see roughly 20 crores a year unwind every year from this line.
Thank you.
Thank you. We take the next question from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Yeah, thanks. Just a broader industry question. I think there have been some studies in Europe which was brand to biosimilar switch, and which have been very successful, and I think that has accelerated the utilization adoption in markets like Europe, like UK. And I think now biosimilar to biosimilar studies are also underway, and the experience has been good that nothing happens if you switch even the existing patients overnight into biosimilars. Now, this situation is quite contrasting to what we are seeing in the U.S. at the moment, and I recognize it's 2 or 3 or 4 years behind Europe. But any such studies, are they underway in the U.S., or do you think anything that can be done from manufacturer side to accelerate biosimilar take-up?
I think the European studies that you're talking about were not sponsored by the companies involved. They were government or institutional sponsored study. If I remember correctly, I think one of them was done by a Norwegian government for the switching. As you know, the European healthcare model is very different from the U.S. healthcare model. There's a significant role of institutions like NHS and government, funding of healthcare. So it was in their interest to do these kind of studies early on. In the U.S., I'm not sure the role of government in doing such studies. So to get private companies to do the studies would probably be linked to some sort of a return on investment from these studies. Having said that, our assessment is that the importance of switchability depends on the therapy and the use. And so what applies for one kind of a therapy, say diabetes or autoimmune, may not necessarily apply to oncology or some other. So it's largely therapy and practice, specific. And clearly, switching can also de facto happen if, for example, there is a sudden change in formulary or coverage, which mandates the coverage. So there can be a switch for driven by payers, which is also sort of an indirect switch that can happen, either in US or in Europe. It's very early, as you rightly said, to predict which way. All of these options are open, and all of us are keeping our eyes wide open to see what is happening everywhere, because being first movers, there's an advantage, but there's also a first mover uncertainty around which way it will go, but we are prepared for either way.
Okay, great. Thank you so much.
Thank you. Well, ladies and gentlemen, that seems to be the last question for today. I would now like to hand the conference over to Mr. Saurabh Paliwal for his closing comments.
Thank you, Janice. Thank you, ladies and gentlemen, for joining us today. If you have any further questions or clarifications, please do get in touch with me. And we see you next quarter. Have a wonderful rest of the day.